Hello and welcome to Lapping Analytics. My name is Jimmy Lapping. I'm a psychologist and statistician with an interest in a range of topics, including the financial markets. And in this video, I will focus on the correlations between four common subjects in the financial markets, namely silver, gold, Bitcoin, and the Nasdaq 100. And I will do that through the lens of the monthly performance, that is the percentage change in a given month for each of these four subjects from 2014 until, actually present day, but I should say until the month of January 2026 included, because this video is recorded on the 24th of February 2026, so the month of February isn't over yet. So, okay, when we look at gold and silver, for instance, we see that there is a consistent positive relation between gold performance and silver performance. Here you see a scatter plot of the percentage monthly change of gold versus silver, gold on the horizontal axis, silver on the vertical axis. And you can see that I have created this plot for four different periods. Grossly speaking, four periods of 3 years, with the exception being the last period, 2023 onward, because that also includes January of 2026. But what, four, grossly speaking, like same or similar size periods. And you see, well, there appears to be a consistent positive relation between gold and silver, meaning in months where gold underperforms, silver also tends to underperform, and in months where gold outperforms, silver also tends to outperform. Consistent positive relations. Okay, so how does it look for gold versus Bitcoin? Here we see a clearly more mixed picture. You could say that in the first period study, 2014 to 2016, there was actually a slight negative relation between gold and Bitcoin, meaning that better months in gold tend to predict poorer months in Bitcoin and the other way around. But you see that actually the relation between these two subjects has been mixed across time. More about that in a few minutes. Gold versus the Nasdaq 100. So the Nasdaq 100 is a stocks component, it's actually specifically tech stocks component. The reason why I have included this tech stock component is because there is quite a bit of talk in the financial markets that, for instance, Bitcoin behaves like a tech stock, or in some periods silver behaves like a tech stock. So we're going to have a look at those claims with the data at hand. So when you look at gold versus the Nasdaq 100, you can see a positive, somewhat of a positive relationship, it seems, in the COVID period, so 2020 to 2022. I would like to call that the COVID period. 2020, of course, the start of the lockdowns, but then 21, 22 also still like the consequences, and in some countries still also either lockdowns or restrictions due to the COVID-19 pandemic. So in that period, slightly positive, and the rest either flat or slightly negative. So it's a picture that looks, not exactly the same as for gold versus Bitcoin, but in any case, what they have in common is it's the relation between gold and the other subject is not outright positive, as for instance we saw between gold and silver. Silver versus Bitcoin, we see something quite similar to what we see for the previous one, which was gold versus the Nasdaq. So here we see silver versus Bitcoin, a positive relation in the COVID period. And then, well, it's slightly different or mixed in the other three periods, and definitely not positive in the last 3 years. And when we look at silver versus the Nasdaq, well, actually also similar. We see a positive correlation in the COVID period, but for the rest flat. And finally, Nasdaq versus Bitcoin, we see generally a positive relation between these two. Now, of course, these slopes do not in themselves express correlations. They just indicate if there is a positive or negative relationship without quantifying whether that is a strong relationship. So, because the strength of the relationship also depends on the amount of dispersion that there is around that straight line. So let's have a look at the correlations between these four subject studied Bitcoin, gold, silver, and the Nasdaq 100 for each of the four time periods of about 3 years. Again, these are correlations of the percentage change performance in a given month. So the percentage of increase or decrease in value of the subject in a given month. So from beginning to end. Okay, so what do we find? First of all, we find consistent positive correlations between gold and silver, as we already also saw in the first scatter plot. I mean, again, we couldn't see if it was a strong positive relationship, but we saw 4 times an increasing line, like going up, reading from left to right. And here you see the correlations, which while were a little bit stronger prior to COVID, I mean, the rule of thumb has always been the correlation between gold and silver is about 0.8 or above 0.8. That was true for the pre-COVID period. But when we look at the last 6 years, so since the start of 2020, yes, there is still a clear positive relation between gold and silver through the lens of the monthly performance, and then still clearly the strongest relation in this network of 4 subjects. But we can see that it is somewhat weaker than it was in the 6 years before. So still positive, though it's below 0.8. So it has decreased, has come down a little bit, the correlation. Okay, when we look at the Bitcoin versus Nasdaq, which is another interesting one, we see that in 2 of the 4 periods we can speak of a substantial positive correlation. By the way, the red lines in these networks, they would indicate negative correlations. The blue lines indicate positive correlations. Positive meaning one subject performs relatively well, the other tends to do as well. One subject performs relatively poorly, the other tends to do so as well. While with the red lines, it's the other way around, that better months in one subject tend to predict relatively worse months in the other, etc. So here, positive correlation between Nasdaq and Bitcoin for the last 6 years especially. So not as strong as for gold and silver, but well, one can say that in months when the Nasdaq 100 performs relatively well, there is somewhat of a tendency that Bitcoin also performs relatively well. And perhaps this is one of the reasons why some people sometimes ironically, maybe or not ironically, call Bitcoin a tech stock without earnings and outlook updates, because it co-varies in the same directions. It tends to co-vary in the same directions. Finally, one other correlation that I would like to point out, which is above 0.4 as well, is one between Nasdaq and silver for the COVID period. That was also positive. And yeah, for the rest, the correlations are not so strong, so not strong enough to give that a lot of attention. So, and in any case, the Nasdaq versus silver correlation was only substantial in the COVID period. Okay. So, in a nutshell, first of all, consistent positive correlation between gold and silver, although it has decreased a little bit since the start of COVID. Also substantial positive correlation since the start of COVID between Nasdaq and Bitcoin. And while the other one, the 0.43-ish, well, yeah, is it really, is it something substantial? Well, we see, for instance, in the period since 2023, the Nasdaq and silver barely correlate. So that 0.43 that we had in the COVID period, okay, that was just for that period. It's not a consistent positive relation between these subjects. Okay. So, okay, and I think that this picture of 4 periods gives a more nuanced picture than just a network of correlations across the just over 12-year time period. Nevertheless, I also provide the network for that full time period of 2014 till January 2026, including that month. Again, to see, okay, the strongest correlation we find between gold and silver. Next, also moderate correlation between Bitcoin and the Nasdaq. Of course, it's not as strong as we saw in the previous picture that there were since COVID correlations of 0.5 and 0.4. So this is not as strong, but of course this is kind of a pooled correlation estimate for the full time window. So that is of course going to be a little bit lower. So 0.33 still has somewhat of a positive correlation between Nasdaq and Bitcoin, and also slightly positive, but it's the 0.22 is a small, fairly small correlation between Nasdaq and silver. So basically, the strongest clearly is between gold and silver, followed by Bitcoin versus Nasdaq. The tech component here, and the metals component on the other side. That is clearly the strongest link. Now, I personally find these charts interesting as well. What are these? These are cross correlation functions. I mean, here you see in the chart ACF, which is autocorrelation function. Technically speaking, it's so this is what when you run this in R, you get a plot and it says ACF. It is an autocorrelation function, but since it's now two subjects, it's a cross correlation function. What does that mean? Well, it means that, okay, when we look at lag 0, that is the correlation that we just saw in the network between gold and silver. That's this correlation here, 0.724, which is the correlation between the performance of gold in month X and the performance of silver in that same month X. So the correlation between performances from the same month. The positive lag, so the lags here on the right, if there were any substantial correlations up or down, that would indicate that changes, so a certain performance of silver at some point in time is predictive of gold performance several months later. The other way around, if we had substantial correlations in this area, for instance, so at this whole area like left from 0, then we would say that that certain performances in gold in a given month would be predictive of silver performance a few months later, for instance. So for instance, so the correlation here is -5 is the correlation between gold performance in 1 month and silver performance 5 months later, for instance. So that's how you need to read these charts. So it's not sufficient for causal inference, but you can say if there are substantial correlations on a given side, but not on the other, that means that changes in one subject tend to precede, hence predict, changes in the other subject. For gold and silver, we don't see such a picture. We see that the correlations between gold and silver on the lags, which are not 0, are very small, not statistically significant. They would be significant if they exceeded this bound of the blue lines, significant at the 5% level. small correlations. The only correlation that stands out is the lag zero correlation, which is concurrent. So but one cannot say that, for instance, gold performance in 1 month is predictive of silver performance several months later, or the other way around. What do we find for gold and Bitcoin? We already saw that the lag zero correlation between gold and Bitcoin is, well, it was not substantial, not worth more than, not even worth a mention. I think it's close to zero. The only correlation which slightly exceeds these bounds here to the downside is this minus 0.17, which is a small correlation really. It indicates that the better gold performance in a given month predicts worse Bitcoin performance in the next month, and relatively worse performance of gold in 1 month predicts good, like relatively better performance of Bitcoin in the next month. So slightly, it seems some tendency that certain changes in gold 1 month earlier say something, or like in a month now, say something about Bitcoin a month later, for instance. But again, this correlation of minus 0.17 is super small. What do we find for gold and Nasdaq? Here we see a positive correlation at lag 4. So here we would say that good performance in the Nasdaq at a given point is to some extent predictive of the gold performance 4 months later. But again, it's the correlation of 0.23. It's not a strong correlation, so it's not that you can really use, you say, okay, the Nasdaq 100 in this month had this and this performance. Now we can be, we can really make bold predictions about the gold price 4 months later. Not like that. These correlations are quite weak. For silver versus the Nasdaq, we see something similar. The main difference is that the lag zero correlation was a bit stronger here between silver and Nasdaq over the full time period of since 2014. We had this 2.224. And at lag 4 it is 0.18. So again, also some indication that Nasdaq performance in one moment is to some extent predictive of silver performance 4 months later. But again, this correlation is relatively small. Same for Bitcoin and silver, although here we are seeing, we are speaking a lag 9. So here we would say that Bitcoin performance in a given month is to some extent predictive of silver performance 9 months later, to the downside, which means that if Bitcoin in a given month outperforms, then silver is more likely to underperform 9 months later than outperform, and the other way around. If Bitcoin now underperforms, then silver is more likely to outperform 9 months later. But again, a relatively weak correlation, no strong correlations here. And between the Nasdaq and Bitcoin, actually the only correlation that stands out a little bit is the 0.329 at lag 0. So basically, it's fair to say, although a few lags have weak, like non-zero lags have weak correlations, we don't have a picture or a situation that, for instance, you could say, given how this subject performs right now, I can make bold predictions about how another subject will perform 3, 4, 5, or 9 months later. That it's not that clear cut. And although one can say, to some extent, one can understand comments like, Bitcoin behaves like a tech stock without earnings and outlook updates, of course, which it is, because of course it's not like you can do a fundamental analysis on Bitcoin like you can do on the companies that are in the Nasdaq 100. That is true, of course, but that statement does not imply that you can that from Bitcoin performance you can tell very accurately what the Nasdaq is going to do or vice versa, no? Or even what's happening in the same month, because the lag zero correlation isn't even forward looking in any way. It's a concurrent correlation between these 2 months. Anyway, these are some these are the results of the study that I did on these correlations of monthly performance of these 4 subjects. To just give another example of what you can do with your own research of the financial markets. Of course, I took these 4 subjects: Bitcoin, gold, silver, and the Nasdaq 100. By the way, all expressed in US dollars. If you express it in other currencies, you will probably find slightly different outcomes. Reason for expressing them in US dollars is because that's the standard currencies in which these subjects are reported in international markets. The US dollar is still the world leading currency. So yeah, that's of course a note. If you did this with your own currency, you would probably find somewhat different outcomes. Although I doubt that they would be very different. Um, Okay, having said, I hope you found that useful. If you have any questions or comments, feel free to place them in the below the description of this video in the comment section. And thank you for watching, thank you for listening, and I hope to see you in a next video. Bye bye.